Welcome to Grab the Horns. I'm Daniel Cooper. Glad that you could join us today. What we're going to be doing today is we're going to be looking at a couple of different stocks that we've analyzed in the last week or so, and then we're going to look at the general market where we're going to be kind of analyzing the S&P 500. So let's go ahead and begin. The first stock that we're going to look at is Pandora. We touched on this yesterday. The ticker symbol on that is P. Again, it did have its IPO yesterday, closed around $17.42. Which was higher than its IPO price of $16 per share. Now, at the end of yesterday's video, we suggested that if you're looking to invest in Pandora, it would probably be wise to wait out a few quarters, keeping an eye on its growth and earnings execution. So let's go ahead and jump right into today's stock and see what it did. Today, just one day after its IPO, Pandora got a vote of no confidence from the investment community. As we can see here, it fell almost 24% during regular trading hours, and you can see the after-hours market dropped almost another 4%. So it hit a low during regular trading hours of $13 per share, and then it continued to slide after that. For an IPO that is extremely bearish, this is what Richard Greenfeld of BTIG Research had to say. He actually came out with this report quite some time ago saying that Pandora has a price target of around $5.50, saying that it's got a lot of competitors out there such as Spotify and Turntable.fm, some other radio type internet programs that are out there that are competing with Pandora. The next stock that we're going to jump into is one we also analyzed recently, silver. Let's go ahead and pull up a chart of silver. This is what it looks like here. Part of the analysis that we did on silver was that it offered a good stock to trade options on based on its high volatility, good options volume, and low bid-ask spread on their options. Now that still remains true. We also did mention that the pattern was developing at that point in time where it looked like an ascending triangle. At this point, it looks like that has broken down. If that had continued, it's a very highly bullish type sign, especially if it had broke out over $38 a share. But that pattern has broken down from here, as we can see. Now, it would be wiser, instead of trying to look at that, is really keep an eye on some other aspects of the economy. In particular, keep an eye on the price of oil, the possibility of raising the debt ceiling once again, and further developments on the quantitative easing, or QE3, the third round of that, which may happen. And, you know, if those things come to pass, that's when you could really see silver start to be bullish again. But those are definitely some things to keep an eye on before you decide if you want to invest in silver right now. The next stock that we're going to be looking at is Talbots, ticker symbol TLB. Now, Talbots has rebounded slightly from its 40% drop following their dismal outlook and store closings. Here's a look at their chart here. The stock did reach a low of $2.33 last week when we talked about it, and now it's trading around $3.20, so almost up $1 from where it hit on its low. A fast turnaround for the stock is very unlikely, however, unless a large player steps in. Which, you know, it doesn't look like that's going to happen anytime soon. So you want to be cautious of this because TLB, it still is likely to retest those $2 levels that it's seen before, like we talked about in the last video back in 2009 when it hit those $2 ranges there. So that sums up the three stocks that we're going to talk about. Now we're going to take a look at the market in general. We're going to be analyzing the S&P 500 here. So what we did is we pulled up a chart of SPX, which does represent that S&P 500 index. Now, we've talked a bit about the S&P 500 and its approach towards that 200-day simple moving average, which we see as this red line here. Many stocks are following that exact same pattern, so it would be extremely wise to really keep an eye on whether it can maintain above this or if it breaks down. Today, the S&P, it did reach an intraday low of 1,258, basically touching and then jumping ever so slightly off that 200-day simple moving average, which is a little bit concerning there. The next few days are going to prove very crucial, so really keep an eye on this key technical indicator to see what happens not only with the S&P, but a lot of the stocks that we've been analyzing as well. Glad that we could revisit some of the stocks that we've looked at. You know, some of the things that we were talking about before on some of those positions are definitely holding true at this point, and you definitely want to keep an eye on the general market. Again, we looked at the S&P 500. That indicator and really, you know, that simple moving average line of 200 days that we looked at is going to play very key into the next couple of days and weeks here to see what happens with the market. Is it going to bounce up, or is it going to break through that on the downside and really start to slip from there? So keep an eye on those before you make some of your major stock decisions here, because you really want to make sure that whatever you're investing in, you're catching it at the right time in the market, and really you're not trying to buck the trend. So as always, we hope that this was good information for you, that you're able to pull something away from this and go out there, go grab the horns.